Welcome back to our channel, where we dive deep into fascinating stories of fraud, scandal, and deceit. Today, we have an extraordinary case to discuss, one that involves an iconic electronic retail chain, foreign bank accounts, and a family-driven fraud empire. Prepare yourself for the astonishing tale of Crazy Eddie. Crazy Eddie, a chain of electronic stores that gained immense popularity in the 1980s, was akin to today's Best Buy, a high-energy, zany version of the electronics giant. With nearly 40 locations, Crazy Eddie became the sixth largest chain of electronic stores in the United States, controlling almost 4% of the market. But what made Crazy Eddie truly stand out was its larger-than-life advertising campaign. Their loud, gimmicky, and low-budget commercials aired on both television and radio, leaving an indelible mark on popular culture. Who can forget their catchy slogan, "We are not undersold, we will not be undersold, we cannot be undersold"? However, beneath the surface of this seemingly successful business, a web of fraud was being woven. Let's delve into the shocking details. The fraud at Crazy Eddie spanned nearly 2 decades, with 2 distinct eras of deception. In the 1970s, the Antar family, who owned and operated Crazy Eddie, focused on evading taxes as their primary motivation for fraud. Their method was simple: skimming. As many customers paid in cash during that era, Crazy Eddie would skim off a portion of the cash sales and avoid reporting it. They hid the money in multiple bank accounts, including one in Israel with over $6 million. By keeping their profits artificially low, they reduced their tax liability, gaining an unfair advantage over their competitors. This allowed Crazy Eddie to offer insane prices, making their price match guarantee a powerful marketing tool. But the 1980s brought about a change in their fraudulent tactics. With the goal of becoming a publicly traded company, Crazy Eddie's focus shifted to inflating their profits to attract investors. They meticulously manipulated their financial statements to make their profits appear higher than they actually were. They engaged in fake sales, overstated inventory, and even manipulated comparable store sales figures. To ensure their fraudulent activities went unnoticed, they employed a key player, Sam Antar, Eddie's cousin and chief financial officer of Crazy Eddie. Sam, a trained CPA, used his knowledge to deceive auditors, distract them, and even alter their work papers. With auditors unable to detect the extensive fraud, Crazy Eddie's financial statements continued to deceive investors, leading to a surge in their stock price. Eventually, the bubble burst for Crazy Eddie. Rising prices, increased competition, and aggressive expansion plans led to a decline in the stock price. Shareholders, now in control, uncovered the fraud, leading to bankruptcy for Crazy Eddie. Sam Antar, the mastermind behind the fraud, cooperated with authorities, exposing the extent of the deceit. He testified against Eddie Antar and other family members, leading to their conviction and imprisonment. The legal aftermath of the Crazy Eddie scandal was as dramatic as the fraud itself. Eddie Antar and other family members faced charges of securities fraud, conspiracy, and obstruction of justice. The trial captured national attention, revealing the shocking extent of their fraudulent activities. In 1997, Eddie Antar was sentenced to over 6 years in prison and ordered to pay millions in restitution. His brother Mitchell received a lesser sentence in exchange for his cooperation. The downfall of Crazy Eddie became a cautionary tale for investors and a wake-up call for regulatory authorities. The Crazy Eddie fraud case exposed the flaws in the auditing system and raised questions about corporate governance. It prompted changes in regulations and increased scrutiny of financial reporting practices, aiming to prevent similar frauds in the future. Today, the name Crazy Eddie is synonymous with fraud and deceit. It serves as a reminder that even the most successful and beloved companies can harbor dark secrets beneath their flashy exteriors. As we conclude this captivating journey through the Crazy Eddie fraud scandal, we are reminded of the importance of transparency, accountability, and ethical business practices. The tale of Crazy Eddie teaches us to be vigilant and skeptical, questioning the integrity behind every success story. Thank you for joining us today. If you enjoyed this video, don't forget to like, subscribe, and hit the notification bell to stay updated on our upcoming videos. And remember, never be afraid to dig deeper and uncover the truth.